Over the past 60 days, I found 6 banks handing out starting credit limits over $10,000 to small business owners. Yes, even brand new ones. With these banks, you don't have to stress over gathering bank statements or tax returns or profit and loss sheets. I'll show you how one brand new business owner got approved for $12,000 within days of setting up his business, which bank will approve you for business credit without a hard credit pull if they know you first, and how people with bankruptcies and multiple late payments can still get approved for business funding even when it's still reporting on your credit profile. Now, Bank of America definitely makes it on the top 10 list of banks to hit up for business funding first. While their cards offer a slightly shorter 0% APR period of 9 months, they pack a punch with unique benefits like pulling from TransUnion and allowing for double dipping, meaning you can get approved for 2 business cards with just 1 hard credit pull. Now, let's talk about what sets Bank of America apart. For one, their flexibility and generosity seem to mirror their approach on the personal credit side. Many applicants report great success transitioning into Bank of America's business credit cards. Take this data point, for example. They said Bank of America has been very generous with me on the personal side, so I decided to give the business arm a try. So far, they are being generous. $35,000 starting limit. Not sure of the interest rate yet, but open a checking account and savings account all online, no drama or paperwork. So this person was ready for success. They had a 2-year-old LLC and a FICO score in the 820s. But as you might already know, while your FICO score is crucial, your credit profile is just as important, sometimes even more so. From my experience, many business owners get tripped up on 2 major hurdles. For one, they have too many inquiries in the past 6 months. If your file is inquiry heavy, banks might see you as a credit seeker and deny your application. And the second, identity verification issues. This is often overlooked, but really critical. Your name and address need to match across all documents, and you should be ready to provide a driver's license or utility bill on short notice. One of the most exciting opportunities with Bank of America is their allowance for double dipping. And check out this data point. They said 1 approved for my own social security number and sole proprietor at the end of the app online. I applied for a second under an EIN number 26 hours later, approved at the end of the app online. A single TransUnion personal inquiry. I locked my report after the first app, approval first card for $15,000, and then the second approval for another $15,000. Now, here's why they succeeded. For one, they had extensive history with Bank of America. They had 2 personal credit cards with Bank of America, including one with 20 years of age. Building that level of trust over time matters a lot. They also had an existing business credit card and both personal and business checking accounts with significant deposits. Another thing they had was business age and a good profile. Their business EIN was 4 years old, signaling stability and staying power. Banks are increasingly favoring businesses with proven track records over newly formed LLCs. They also had good income levels. Their stated business income was $90,000 and their personal income exceeded 6 figures, and that gave Bank of America confidence of their ability to manage high credit limits. Also, their overall credit health and profile was great. They had an average age of accounts of 16 years, which is exceptional. Anything over 10 years stands out to banks. And then their credit mix, they had 1 outstanding loan showing they could handle multiple forms of credit responsibly. But before we get into the next bank, I created something that can help you replicate this kind of success for your own business, so you'll know what banks to target next. I already launched my 0% APR business credit card database. It comes with 697 banks that offer no interest for up to 18 months. You'll know which credit bureau each bank pulls from, the top banks in your state offering 0% interest funding. You'll see which banks let you open multiple credit products with 1 hard pull. Plus, it includes every bank from my original 0% APR list. So just hit the link below to get instant access. Moving on, when it comes to business credit cards, Chase is in a league of its own. Known for their exceptional sign-up bonuses, lengthy 0% APR periods, and flexibility with multiple business card approvals, they're a top pick for new entrepreneurs. But the key to success with Chase lies in your understanding of their nuances and timing your application strategically. First, let's talk about credit pulls. Chase typically pulls from Experian, but in some cases, they also pull from TransUnion. While this might sound intimidating, data shows that you don't necessarily need a prior relationship with Chase to get approved for their business cards. However, having an existing relationship with them definitely helps. It's like having a foot in the door. And here's a critical tip. If you're considering Chase business cards, it's best to apply for them first, especially if you're planning to apply for multiple cards from different issuers. That's because Chase tends to be more inquiry sensitive, meaning too many recent inquiries on your credit report could hurt your chances for approval. But here's something not everyone knows. You can get approved for multiple of the same Chase business card by using different EIN numbers for separate businesses, or even applying as a sole proprietor using your social security number. And this flexibility allows you to maximize your funding potential without overcomplicating your credit profile. And let me show you how this plays out in real life with a testimonial that speaks volumes about what's possible with Chase. They said, received instant approval for $31,000. This is my first Chase business card. So let's break down what made their approval so smooth. For one, they had pre-approved offers. They kept seeing the you're already approved offers for the Ink Cash and Ink Unlimited and Ink Premier cards in their personal Chase account. These offers are like a golden ticket. If you see them, your approval is practically guaranteed, even though a hard credit pull is still required. And here's a fun fact. I got approved for the Chase Ink Cash card the exact same way less than 6 months ago, so I know firsthand that this method works. And then they had a strong existing relationship with Chase. This person already had 3 personal Chase cards. They had the Amazon Chase card with an $18,000 limit, a United Club Infinite card with a $16,000 limit, and a Chase Sapphire Reserve card with a $31,000 limit. This demonstrated a history of responsible credit usage and the ability to handle higher credit limits too. And they also had an excellent credit profile with an 800 plus FICO score and a very low 5% credit usage rate. They were a prime candidate. Banks love to see low utilization as it signals responsible credit management. Another thing they had was income and business strength. Their personal income was $160,000 a year, and their business revenue was $90K a year. Combined, this shows both personal and business stability, giving Chase confidence in their ability to repay them. They also had established business credit history. Their 2.5 years of business credit history made them a strong candidate. Even though newer businesses can get approved, having an older, well-maintained business profile is always going to be a bonus. Next, when it comes to business credit, US Bank might not be the flashiest out there, but they're quietly one of the most powerful banks for strategic borrowers. They're known for their inquiry sensitivity and conservative approach, but US Bank tends to prioritize applicants with clean, well-managed credit profiles. But the rewards for those who meet their standards are worth the effort, with 0% APR periods up to 18 months, some of the longest in the industry. And here's some essentials that you need to know. They're inquiry sensitive, like I said. If you've applied for a lot of credit recently, US Bank may see you as a high-risk borrower. They prefer applicants with fewer recent inquiries, so timing is everything. I'm talking less than 3 inquiries in the past 6 months. And they're conservative with their approvals. Compared to other nationwide lenders, US Bank is more cautious about approval and starting limits. If you're looking for massive credit lines right out the gate, this isn't always the easiest path for you. And when it comes to credit pulls, US Bank typically pulls from TransUnion, so you want to make sure that your TransUnion report is spotless before applying. And you got to know that US Bank also owns Elon Financial Services. That's a third-party underwriter that manages credit card programs for over 1,000 local banks nationwide. This means they share information across platforms. If you already hold business cards issued by Elon partner banks, US Bank may limit your starting credit limit to avoid overexposure to you. And let's look at a few real-world examples of how someone leveraged US Bank to their advantage. One person said, "It's been a good week. I started a personal relationship with US Bank by first getting approved for their personal Visa Cash Plus card, then opened a Smartly checking account, and last applied for the US Bank Triple Cash Rewards Visa Business Card and got $23,000 starting limit with no docs or delay to approval." And here's why I think their strategy works. For one, they did relationship building. They didn't jump straight into a business credit card application. Instead, they built trust by first applying for the personal Visa Cash Plus card and then opening a Smartly checking account. These moves help establish a strong relationship with US Bank, showing commitment to their ecosystem. So when it comes to business credit, Citi doesn't immediately come to mind as a standout bank, but they have a few unique advantages that make them worth considering. For one, Citi is one of the few nationwide banks that pulls from Equifax. That's a lesser used credit bureau for business credit cards. Now, why does this matter? Most people have a majority of their inquiries on Experian, which many major banks like Chase and Amex rely on. With Citi pulling from Equifax, you're less likely to appear as a credit seeker in the eyes of the bank, and that's going to boost your approval odds. Now, here's the trade-off. Citi's business credit card lineup is very limited, with only 2 options available, neither of which offers a 0% APR introductory period. This makes their cards less appealing for those looking to finance business expenses interest-free. But check out this data point that highlights how to navigate Citi's system effectively. They said, after receiving several pre-selected to apply emails from Citi and finding a pre-selected offer in my online Citi account, I decided to apply for their business version. Received an instant approval for $16,000 starting limit. First, let's address those pre-selected offers. While they sound exciting, it's more important to know that pre-selected does not mean pre-approved. Pre-selected offers don't involve the soft pull on your credit. In many cases, they're based on general criteria like your geographic location or spending patterns. Now that we got that out the way, this is why their strategy worked. For one, they built a relationship with Citi. They had an existing relationship holding the custom cash card for 1 year and the Strata Premier card for 3 months. This relationship likely played a significant role in their approval, as Citi had already seen their responsible behavior as a cardholder. Then they had an exceptional credit profile. This person's comparable credit was outstanding, which likely gave Citi confidence in approving a higher credit limit. They already had 13 credit cards, and having 10 or more is exceptional. They had a Navy Federal flagship card with a $40,000 limit, a More Rewards card with a $30,000 limit, and they even had a Chase Sapphire Reserve card with a $26,000 limit. This level of credit experience shows an ability to handle higher limits responsibly. And adding to that, they had a strong FICO score too. With a FICO score in the 780s, they demonstrated excellent credit worthiness. High scores like this are a green light for banks like Citi. All right, let's move on to Amex. American Express stands out as one of the most forgiving and forward-looking lenders when it comes to approving business credit cards. They focus more on your potential and overall credit worthiness rather than holding past mistakes against you forever. One of the best kept secrets about Amex is their soft pull policy. After your first personal Amex card approval, where they'll hard pull Experian, any subsequent card applications, both personal and business, are typically soft pulls. That means no additional dings to your credit score for building your relationship with Amex. And here's one good example that highlights why Amex is such a standout in the business credit space. They said Amex Blue Business Plus approval, $10,000 starting limit, soft pull. This is my first business credit card. In the past, I just used PayPal business debit cards. I also hold a Amex BCE with $18,000 credit limit that has been open for a year and 10 months. Now, here's why I think this worked for them. For one, they had an existing relationship with Amex. They already held a personal Amex BCE card with a generous $18,000 limit. This existing relationship likely gave Amex confidence in their ability to manage a business card responsibly. Banks like Amex reward loyalty and consistency, and this applicant had both. Then they had a low amount of inquiries. With only one inquiry in the past 6 months, they didn't appear to be credit seeking or desperate for credit, and that's a big plus in the eyes of any bank. They also had an outstanding credit usage. Their 2% credit utilization rate was remarkable, and that signaled excellent credit management. Amex really wants to see that you can responsibly manage the credit you already have, and this applicant showed they're doing just that. I gotta add that their credit report wasn't perfect. It included 6 late payments on student loans from 5 years ago. But late payments that are over 2 years old hold much less weight in the eyes of banks, especially when they're paired with a strong current credit profile. Despite having the negative marks, their FICO score in the low to mid 700s was enough to show Amex they were creditworthy. Now moving on, I'll be honest, Wells Fargo wasn't on my radar as a top pick for business credit cards, but the recent flood of approvals has made me reconsider. In a time when many banks are tightening their lending criteria due to economic uncertainty, rising default rates, and higher rejection rates, Wells Fargo seems to be handing out the bag to qualified applicants. While their starting credit limits aren't breaking records, the sheer volume of approvals and the competitive features of their new business card makes Wells Fargo a bank you should seriously consider too. I think a big part of Wells Fargo's recent push into the business credit space is thanks to their Signify business cash card. This card has been flying under the radar, but deserves some serious attention. And here's why. They have a cash sign-up bonus of a few $100s. There's a 12-month 0% APR period. That's gonna be perfect for business owners looking to manage cash flow or make large purchases without the burden of paying back interest. They have unlimited 2% cash back, unlike the Amex Blue Business Cash Card, which caps out 2% cash back at $50,000 in purchases annually. The Signify card offers unlimited cash back at 2% with no strings attached. I gotta say, this is really a simple yet powerful card, and I'm not gonna lie, I want it too. Now here's what you need to know. Wells Fargo typically pulls your Experian FICO 9 score when applying, and while they're not known for sky-high limits, they're clearly willing to take chances on new businesses and applicants with less than perfect histories. Let me show you how some people have recently landed approvals with Wells Fargo and why their strategies work so well. One person said, after applying online, I got a message that the application was under review or verification. I called the business line and an agent asked me some questions and said I was approved with a $12,000 limit. Now, I think this worked for them specifically because they had an existing relationship. First off, they opened a Wells Fargo checking account 2 months prior, which likely helped establish trust and made the approval process smoother. and they had a thick credit profile. Before applying, they already had 15 personal cards with limits up to $25,000, and they had 6 business cards. This solid history gave Wells Fargo a clear benchmark to compare and approve the application. Now, here's another story highlighting the benefits of applying in branch. They said Wells Fargo Business Signify approved, $12,000 starting limit. Went in branch yesterday to see if I could be approved, went pending in branch, but approval notification from the banker 30 minutes later, and I was able to add the card to mobile wallet the next day. They had absolutely 0 new accounts and inquiries in the past 6 months, and presenting themselves as a stable and not credit hungry, that's a key factor in approvals. Then they also had a high FICO score. Their 800 plus FICO score was a standout, giving Wells Fargo confidence in their credit worthiness. And we can't forget that they went in branch for the application. Applying in branch with a business relationship manager offered a big advantage. These managers often have connections in the underwriting departments and can help move applications along and provide helpful context. You don't get that kind of support when applying online. And one of the most surprising testimonials comes from a business owner who overcame the worst mistake that you can make with your credit. Here's what they said. Approved today, $12,000 after questions relating to business type and start date. 2.5 years since Chapter 7 filing. So they applied with an LLC that had been filed the same month. This proves that Wells Fargo is willing to fund businesses that are days old, making it a greater choice for entrepreneurs just starting out. And something else you got to know is that they applied with an LLC that had been filed just the same month. This proves that Wells Fargo is willing to fund businesses that are just days old, making it a great choice for entrepreneurs just starting out. This person filed for bankruptcy 2.5 years ago and even include a Wells Fargo personal credit card in that bankruptcy. Yet they still secured approval for the business credit. I think this worked because this person likely repaid Wells Fargo in full during the bankruptcy proceedings. A credit card company underwriter once shared some information during a Reddit AMA that I think is really crucial to know here. They said when a customer includes us in their bankruptcy, but still pays back the debt in full, it's not something we forget. Our internal scoring system flags that behavior, and while the bankruptcy itself is still a red mark, their willingness to pay us back shows integrity. Those customers often have an easier time getting approved again down the line, especially compared to those who discharge the debt without repayment. It's not official policy, but we look at the bigger picture when reviewing applications. Now, this underwriter's insights gives us a rare look behind the curtain, showing how human judgment and internal scoring systems can sometimes matter more than what's on paper. And honestly, that's just the beginning. In a rare Reddit interview, this credit card company underwriter shared years of insider knowledge, answering dozens of questions about approvals, denials, and credit limit decisions. So check out the next video here to see how they answered all 40 questions about the credit card industry. Thank you for watching.